We are back. Sam Seder on the Majority Report on the phone. It's a pleasure to welcome to the program Associate Professor in the English Department at Virginia Commonwealth University, David Golumbia, author of The Politics of Bitcoin, Software as Right-Wing Extremism. Welcome to the program, David.
Thanks a lot. I'm glad to be here.
Okay, so let's, for those of us who are uneducated in this area, and give us a sense of what. Let's start first with Bitcoin. I think most people are familiar, broadly speaking, with the notion of cryptocurrencies. Bitcoin is one of them. There now are many of them, but give us a broad overview so that we're all on the same page, at least with what your definition of it is.
Sure. Yeah, there are, as you mentioned, actually, there's probably right now 1,200 or something like that cryptocurrencies out there. They come and go, and many are not widely traded, but there's a ton of them. So cryptocurrencies is part of a project that some of the insiders in the digital world, they go by names like crypto anarchists and cypherpunks, have been promoting for a long time, since the early 1990s. They have a strong desire to what they consider build some kind of cash system that is outside of the state and outside of government control. And in the works of these people, it's very clear that the point of this is to try to tear apart government and regulation.
Let me just before we get to that part of the argument, I give us just a straightforward, and I guess part of it is that there is no neutrality in this concept. But give us as much of a sort of like a taxidermy of these things as possible.
Yeah, I mean, it's hard because you've got Bitcoin, you've got the currency itself on the one hand, right? Bitcoin, the thing that we talk about, its price, which is the easiest way, I think, to think about it is that it's like a stock, right? It's a ticker. It has a ticker symbol, BTC, and you can go buy some of it for however much money you want. And then if you're like one of these people in the Bitcoin world, you hope it goes way up and you can sell it for double, triple, 8 times what you bought it for. And you don't need to get involved with the software at all to do that. You can just go out and do that on exchanges, which are kind of the equivalent of a brokerage account, although much less well regulated. And you can do that for any of these currencies, right? And to most people who are dealing with this, that's all they see. It just looks like another stock they can buy, but it isn't, doesn't trade on some official market.
Now we should say though that there is at least a hope, and to some extent in practice, that it functions less as a stock and more as a currency, right? Where you could actually pay for things with it. I theoretically, I guess I could pay for something with a stock, but very few places will take it. There's attempts to take Bitcoin in the same way that you would take any other currency. Those seem to be ebbing and flowing. I think Stripe, which is a payment system that we use for this show, no longer takes Bitcoin or no longer has a system to take it, but it did as of, I think, like 3 weeks ago. But that's also the hope too, right? That it's a currency.
That is supposedly the primary hope. I mean, that's why we call them cryptocurrencies. And when you read the original papers that were that eventually resulted in Bitcoin, all they talked about was currency in the sense of something you could buy something else with. And in fact, when Bitcoin had its first surge in value, people were really noticing it because it was being used to purchase stuff, especially on the so-called dark web, the most infamous drug supermarket on the dark web, the Silk Road, which was run by a guy named Ross Ulbricht, who's now in jail. Bitcoin was the currency you used to buy stuff, and so there was a lot of currency-like use of Bitcoin for a while, but that use has actually gone down. And as you said, Stripe stopped taking it. There have been a few companies that have taken it, and they've walked away from it, in part because of its volatility, because it goes up so much in value. And that's part of the sort of contradictions you run into when you talk to people about it, because it's often the very same people talking about how great it is that it keeps going up 1,000% in value in a few months, and then saying it's a great currency. And of course, for a currency, you really want it to stay the same price, not to go up or down over a period of time, for a lot of very clear economic reasons.
Right, and practical ones. I mean, if I was to take Bitcoin in lieu of, let's say, $10 a month, I would constantly have to be adjusting how much Bitcoin I take on a moment-to-moment daily basis.
That's right. And there'd be and if you were a producer or a farmer or something like that, there would be a very strong disincentive to ever actually produce your product, because you would probably be better off just holding the Bitcoin and, having it double or triple in value. And that's deflation, hyper deflation, and it is deeply undesirable from an economic perspective.
Okay. So, but we have an explanation of what Bitcoin, I guess, aspires to be and what it is. It's when you make the assertion that it is being used less as currency, how do we know that? I mean, is that anecdotal, or is there some type of is there somebody who measures this?
There are people who measure it, but you're not wrong in that it is hard to measure it, because Bitcoin, all a Bitcoin transaction is moving some amount of coins, a decimal point number usually, from one address, which is just a string of letters and numbers, to another address, which is a string of letters and numbers. And just looking at that, it's very hard to tell whether somebody did that in order to, make some gains, like in the stock market, or whether they bought something with it. There are some sophisticated tools that people use that they know some of the addresses. Like, if a major merchant decides to accept Bitcoin, they usually assign an address or several addresses to their site in order to take Bitcoin, and then look at that site and see how much Bitcoin has gone there. So you can, if somebody were to send some Bitcoin to
Stripe,
Amazon, Stripe, right? You could see that Stripe had received X Bitcoin, and you could infer that was probably to buy something. It's much harder when you look at the other piece of data that you can look at, which is easier, is what merchants say they accept Bitcoin. Right, and that number has gone down. It initially went up a little bit, but it's actually gone down, and I think one of the major financial publications, maybe the Wall Street Journal or maybe it was Forbes, I can't remember, but they put up a chart of which Fortune 500 companies accept Bitcoin, and I think there was one about 2 years ago, and that's gone down to 0, and that's a pretty clear number that we can all agree on.
And before we get to blockchain, because I want to talk about blockchain,
mm-hmm.
What about other cryptocurrencies? Ethereum, I think, is one that whose name I hear more, or Litecoin is another one that I hear more, which seems to be a derivative of Bitcoin, and or Bitcoin Cash. Explain to us what those are before we get to blockchain technology.
Yeah. So there's different kinds of them, right? And some of them, like Bitcoin Cash, for example, is where some of the developers of the Bitcoin software decided that they had written a better version of the software. And so a few people are now running this alternate version of the Bitcoin software, and that uses this other token called Bitcoin Cash. In some cases, and we can actually talk about this in a minute, they aren't actually independent pieces of software. You may have heard about, recently there's this thing called initial coin offerings, or ICOs, which are a really problematic development, where new companies form around issuing a new token, and they've really... The market for these has just gone crazy, and there's things like banana coin and garlic coin and all kinds of stuff, and they seem very scammy. And all of these are actually run on the Ethereum blockchain. They don't have their own separate blockchain, but you can... so it's hard to see like who's running the software and who's just trying to sell this stuff for, to make money off it. And of course, unlike a true initial public offering, where if you buy the stock, you own a part of the company, in most of the initial coin offerings, you don't own anything. You just have this token that may or may not be worth anything in the future, but it's unrelated to whether the company does well.